Today, what we're going to do is go through the prologue chapter of our managerial accounting. And this chapter, what it does is it sets out a lot of the theory as to exactly why we do, you know, some of the things about why we're doing what we're doing and how managerial accounting, how it's going to help you in your career. So let me go ahead and share the screen. So first of all, what is managerial accounting? You might be asking yourself, okay, I took accounting 4A, so that is financial accounting. And so I might be asking myself, what is managerial accounting? Or so managerial accounting. So first of all, financial accounting, we were using that to deal with external users. So people who are going to make financial decisions. Whereas managerial accounting is going to be used by managers who are going to use the information in order to control the organization. The time focus. So again, financial accounting would be for external parties, whereas managerial accounting is going to be more for internal parties within an organization. The time focus is that financial accounting would summarize past activities, past events, whereas managerial accounting is looking has more of a future orientation, looking at how you're going to analyze information in order to be able to make decisions that are going to impact the future. So financial accounting data should be objective and verifiable. Managerial accountants focus on providing relevant data, even if that data is not completely objective and verifiable. So, for example, when we get to it, some of what managerial accounting data you're going to use, some of it might be more of a subjective nature where it isn't it isn't so much anything that you're really going to be able to point to. It's more, but you're still going to use that more qualitative in nature. It's more, um, whereas financial, we were looking at just numbers and how that was going to go. Precision. So financial accounting, there was an emphasis on precision, again, to report to external parties. Managerial accounting is going to focus on timeliness by providing good estimates as soon as possible rather than waiting for precise data later. So managerial, we're trying to get information that is timely in order for us to be able to use it in order to make decisions. Again, financial accounting was concerned with uh, company-wide reports, whereas managerial accounting is going to look more towards different segments of the organization. And a segment is a part of or an activity of an organization for which the managers would like cost, revenue, profit data. So it might be product lines, sales territories, different divisions, different departments. That's what managerial is going to look for, breaking it down for different areas within the organization. And then there are different rules and requirements. Whereas in financial accounting, we had to conform to the generally acceptable accounting principles and the international financial reporting standards, whereas managerial accounting doesn't have to comply with externally imposed rules. It is, managerial accounting, it's just providing information to the manager. Financial accounting is mandatory because various outside parties require the periodic financial reports. Again, you're going to have to use that to file taxes. Investors need that information, and you're required to provide that, and so on and so forth. Financial. Whereas managerial accounting, it's not mandatory, but it's useful and it's going to help you to help make decisions. So again, areas that managerial accounting are going to help managers to carry out. It's going to help managers in planning activities, in controlling activities, and in decision-making activities. And so, for example, planning activities in that you're using it to establish goals and to specify how you're going to achieve them. And so plans are often accompanied by a budget. A budget is a detailed plan that has future uh, for the future that's usually expressed in formal quantitative terms. So you're figuring out exactly how much you're going to spend in these different areas. And then controlling involves gathering feedback to ensure that the plan is being properly executed or um, okay, here we go. So it's making sure that it's properly executed or modified as circumstances change. Part of the controlling process includes preparing financial performance reports, which compare budgeted to actual results in order to help to improve our future performance. Decision making involves selecting a course of action from competing alternatives. Many managerial decisions revolve around answering three questions. We want to know what we should be selling or and who we should be serving, and then how should we execute on that. So now we're going to look at what planning might look like based upon different majors, college majors that you have. So somebody that's a marketing, or how this would look for depending upon what your major field of study is. So if you're involved, if you're a marketing major, you might be concerned with, in the way of planning, you might be concerned with how much should we budget for TV, print, and internet advertising, and how many salespeople would we need to hire in order to serve a new territory. And then types of controlling questions that a marketing major might ask might be, is the budgeted price cut increasing unit sales as expected? Are we accumulating too much inventory during the holiday shopping season? This would be controlling type things that we might want to know. Decision making, should we sell our services as one bundle or sell them separately? Or should we sell directly to consumers or go through a distributor? Now, somebody that was majoring in supply chain management, which we don't have at Merced College, but you might see somebody with that, they might be concerned about in way of planning. They might want to know about how many units should they plan to produce within the next period, and then how much should we budget for the next period's utility expense. And then controlling for supply chain a supply chain management major might be concerned with, do we spend more or less than expected for the units we actually produced, and are we achieving our goals of reducing the number of defective units? And then finally, for decision making is, should we transfer production of a component part to an overseas supplier, or should we keep it in-house, or should we redesign our manufacturing process to help lower inventory levels? And then somebody that's a human resources management major, again, not something that we have at Merced College, but some of the things that they might be concerned about with planning is, how much should we plan to spend on occupational safety training? Or how much should we plan to spend on employee recruitment advertising? Controlling is our employee retention rate exceeding our goals? Are we meeting our goals of completing timely performance appraisals? And then decision making, for somebody that's an HR management major, they might be concerned with something like, should we hire an on-site medical staff to lower our healthcare costs? Should we hire temporary workers, or would we be better off to hire full-time workers? Now, somebody that's in a now The reason that we go over this is to understand that not just is because accounting and managerial accounting, yes, it's important for people that are going to be working in the accounting department, but it's something that is going to be needed for people working in every area of the organization that are managers. So a large portion of accounting majors will engage in non-public accounting employment at some point in their careers. So they're going to work in with private companies. And employees expect accounting majors to have a strong financial uh, accounting skills, but also expect application of the planning, controlling, and decision-making skills that are the foundation of managerial accounting. And for accounting majors, the Certified Management Accounting or CMA designation is a globally respected credential that will increase your credibility, upward mobility, and compensation. And it's what it requires is it requires a bachelor's degree from an accredited college. It requires 2 continuous years of relevant professional experience and the passage of a CMA exam. So if you really like this, it's something that you can maybe look to do in the future, is to get your CMA certification. But for them, there are two uh, parts to the exam, and that's what this slide shows. The CMA focuses on planning, controlling, and decision-making skills that are critically important to non-public accounting employers. It complements the CPA exam, which is a certified public accountant exam, which focuses on rule-based compliance, assurance standards, financial accounting standards, business law, and the tax code. And you can find out more information about the CMA program from the IMA's website at imanet.org or by calling the 800 number. Another certification that you might look to, again, if you really are into this and you like it and it kind of sparking an interest in you doing it, it's called the Chartered Global Management Accountant, or a CGMA, is a designation. It is another globally respected credential that will also increase your credibility, upward mobility, and compensation. And this slide gives you a little bit more information about it. The topics included in the CGMA exam, and notes that this certification also requires passage of the CPA exam. So for this, you would have to pass the CPA exam and so on and so forth to be able to receive this. But it focuses on technical skills, business skills, leadership skills, people skills, and ethics, integrity, and professionalism. This multi-part CPA exam emphasizes rule-based compliance, assurance standards, financial accounting standards, business law, and the tax code. You can find out more about it, about becoming a CGMA at cgma.org. So managerial accounting beyond the numbers. So again, some of what you're going to do in managerial accounting, you are going to use financial figures and numerical data, but there are going to be times where you're going to also have to use qualitative analysis as well. So that would be other factors that are not necessarily directly tied to finance. So measurement skills. The primary purpose of this course is to teach measurement skills that managers use to support planning, controlling, decision-making, and activities. So measurement skills help managers to answer such questions as, how should I create a financial plan for the next year? How well am I preparing relative to my plan, or performing relative to my plan? And then managers need to apply these measurement skills to a broader business context to enable intelligent planning, control, and decision making. So you're always looking at what was in the past, and you're looking at then what would be in the future. Now, business managers also have an extraordinary opportunity to harness what is known as the big data phenomenon. And this is a relatively recent phenomenon. Big data refers to large collections of data that are gathered from both inside and outside of a company that can provide opportunities for ongoing reporting and analysis. Big data can be both structured, such as memos and reports, or unstructured, such as videos, pictures, audio, and other digital forms. Big data is often discussed in terms of the 5 V's. The first 3 of these V's are variety, volume, and velocity. Refine the definition of big data. The remaining V's, value and veracity, define users' expectations with respect to big data. So again, looking at that is an important area, is utilizing big data. Data analysis is another important skill and area that you're going to be tasked with as a managerial accountant. And so from a managerial accounting standpoint, the goal of managers is to use data analytics to derive value from this big data. You're trying to find out, you have all this data set that you've gathered within your company, or that you subscribe to, or that you've gathered, but you need to be able to take it, break it down in order to use it so it's something actionable. And so big data analytics refers to the process of analyzing data with the aid of specialized systems and software to draw conclusions about the information that they contain. Managers often communicate the findings of their data and analysis to others through the use of data visualization techniques. So then being able to use graphs and charts, maps, different types of diagrams. Those are all areas things that you can do in order to explain what you found out. Another important area of managerial accounting and of accounting in general is ethics. Ethics is an area very important in the business world. And I'm sure you've seen that in your other courses that you've taken. If you've taken business law, if you've taken business 10, certainly when you took financial accounting, you've seen that ethics is an area that is extremely important. So the IMA, which is the Institute of Management Accountants, they have a statement on ethical practice that provides guidelines for ethical behavior. So in the area of competence, you need to maintain your professional competence. You need to follow applicable laws, regulations, and standards. Provide accurate, clear, concise, and timely decision support information to support managers in making decisions. Recognize and communicate professional limitations that preclude a responsible judgment. Confidentiality is a really big deal in this area, and it's a big deal, obviously, in all businesses. It's important that you not disclose confidential information unless you're legally obligated to do so, and not to use confidential information for unethical or to illegal advantage. Ensure that all relevant parties do not disclose confidential information. Again, integrity, that's another area that is vitally important. So we want to mitigate conflicts of interest and advise others of any potential conflicts that might exist. We want to refrain from conduct that would prejudice carrying out duties ethically and work to contribute to a positive ethical culture. We also want to abstain from activities that might discredit the profession. And in credibility, we want to communicate information fairly and objectively. We want to disclose delays and deficiencies in information, timeliness, processing, or internal controls. We also want to disclose all relevant information that can influence the user's understanding of reports and recommendations, and communicate any professional limitations that would preclude successful performance of an activity. And in the IMA statement of ethical professional practice guidelines for resolution of an ethical conflict. So when there is an ethical conflict, the IMA has given us some guidelines for which we can follow. So we need to follow these. Well, first of all, you want to follow your employer's established policies, but if that doesn't work, then you can consider the following. So you can discuss the conflict with your immediate supervisor or your next highest uninvolved managerial level. If immediate supervisor is the CEO, then you might consider going to the board of directors or the audit committee, if there is one. Also, contact with levels above the immediate supervisor should only be initiated with the supervisor's knowledge, assuming that the supervisor is not themselves involved in the conflict. The other thing that you can do is you can accept where legally prescribed. You need to still maintain confidentiality. You need to clarify issues in a confidential discussion with an objective advisor, and then you might need to consult an attorney regarding what your legal obligations are. But why do we have ethical standards? Ethical standards in business are essential for a smooth functioning economy. Without ethical standards in business, the economy and all of us who depend on it for jobs, goods, and services would suffer. Abandoning ethical standards in business would lead to a lower quality of life with less desirable goods and services at higher prices. And again, ethics have a lot, not just within the organization, but it can also be in areas and things that would affect people outside the organization. And as we go through this, we're gonna see that there are, every once in a while there'll be a discussion forum for you that you will answer, and I will pose an ethical question to you. And I want you really to think about that, how it's not going to impact just you as a manager or as the accountant or the organization, but some of that is going to possibly impact decisions that what you input and how that is impacting managers and what decisions they make that can affect the wider social scope as well. So it's important. Again, ethics are really important, especially with accounting. It's an important area. And so we will learn more about that as we move forward. A strategic management perspective is one where, first of all, strategy is going to be the game plan that enables a company to attract customers by distinguishing itself from competitors. We want to look at how we're going to target our customers and how we're going to differentiate ourselves is part of the strategy. Companies also have a customer value proposition. That is where companies that adapt there's different ways that you can do this, but a customer intimacy strategy is one where the company seeks to understand and respond to individual customer needs. An example of this might be that pursue such a strategy might be they're responding to individual customer needs better than competitors. So, for example, the Ritz-Carlton Hotel or the Nordstrom department stores trying to meet customer needs better than what their competitors could. Companies that would look to adopt a orientational excellence strategy, strive to deliver products and services faster, to be more convenient, to offer lower prices. Examples of this might be Southwest Airlines, certainly Walmart. They're trying to be more convenient. They're trying to be lower prices, and a Vanguard Investment Group. Companies that look for product leadership are ones that want to offer a higher quality product than competitors. Examples could be Apple with the computers and the phones that are always seeking to offer a higher quality product than what competitors would offer, or Cisco Systems with some of their networking gear. They're trying to, they're very trying to give something better than what competitors could give. Another really important area that might be and will be involved with is enterprise risk management. And that is a process that's used by a company to proactively identify the risks that it faces and to manage those risks. And again, once a company identifies its risk, the most common risk management tactic is to reduce risk by implementing specific controls. So we want to implement specific controls within the organization. And again, we'll look at that some more later, but we just want to know. So for example, and this is becoming a much more important area, this concept of reducing business risk. This is becoming a much more important area. So an example of a business risk might be having intellectual assets stolen from computer files. So we don't want, our computer data to be hacked and for people to get access to that. So we might create firewalls that prohibit computer hackers. We might do something that we're experiencing now at the college, and something that you're probably experiencing as a student, is that we are implementing what's called two-factor authentication or multi-factor authentication. So now you have to do that. It's not just simply a username and a password. You have to use your phone in order to be able to, they'll send a text, or you use an app to be able to to verify again another layer of verification. So that's something you might do to control that, to prevent somebody from getting into your computer system. One thing too is another business risk are having products that would be harmful to customers. Obviously, we don't want to do that. We want to make sure. So we want to develop a formal and a rigorous new product testing program. So anytime you're developing a new product, if you're a chemical company and you're manufacturing cleaning products, you want to look at that, make sure that it's going to be safe for the people that are using it. If it's a coffee maker, make sure it's going to be safe. All of these things, because not only you don't want to obviously harm your customer, but what also comes along with that is and we'll look at that also as we progress through this, but there's a lot of costs involved if we have to recall or to remedy a product. So we need to do that. So that's a control that you might be responsible for assisting with, is developing a product testing program, product quality program. Risk of losing market share due to unforeseen actions of competitors. And so you can develop an approach for legally gathering information from competitors' plans and practices. There's ways to do that, and you want to do that to know, kind of keep an eye out for what's happening. You might also, another risk might be poor weather conditions that would necessitate shutting down operations, and that can happen. And it's important to develop contingency plans for overcoming weather-related disruptions. Or if that is, what are you going to do? Because that can have a major, major impact, the weather. I can give an example probably that you may not have remembered, but back, I think it was when we had Hurricane Katrina. There was a chemical company back east. They were manufacturing peroxides. And of course, they lost power and they also lost the generators that they had to be able to generate electricity. And this peroxide had to be kept cold, otherwise, it would decompose and it would become explosive and catch fire. And obviously, for this company, Akama, they were not able, they didn't, they thought they were covered. They thought, okay, we have these generators, we have, this, they thought they were covered. And obviously, Katrina, that was really, it was bad. I believe it was Katrina. It was bad. And it did cause an issue for them. So obviously, their workers had to evacuate because it was not safe for their workers. But some did stay behind and tried to get this stuff moved into other areas where it could be kept cold, like into the refrigerated containers, like the trailers for the semis. And it just, but even that, it was too much. And so it caused a big issue there, a big safety issue in there. So you have to be prepared, for weather. Obviously, that company wasn't. They've obviously since learned from that, but it was it's an interesting case study because you realize, okay, poor weather, it's going to affect you. But it might just be even whether you're not able to go to your place. So making plans for that, that might be a control. Website malfunctioning is you want to thoroughly test a website before you actually go live with it, and also to anticipate how many people are going to be accessing that website at one time. Make sure you have the capacity for that. A supply strike halting the flow of raw materials. So you might want to establish relationships with two different companies that are capable of providing the needed materials. Sometimes that can happen, or there's issues with transportation that can happen. I know we just got recently in Canada, the Canada Post, they all went on strike. And so obviously you couldn't even send anything to Canada through the post office. The post office or US post office quit taking anything that had to go to Canada. So that's an issue. So being prepared for that. I know this was back in the early 2000s. We had the West Coast port strike. So we couldn't even get the stuff here. And I know that caused issues. My family, we have a business, and that caused a lot of issues for us because we simply couldn't get it. Our supplier couldn't get it to us. So then I know we lost. I know of at least one customer that we lost. And she ordered a bunch of stuff, and she didn't. And it took. She would have eventually gotten it, but she didn't want to wait. And it was an issue. So just being aware of that. So those are all risks. And again, looking at how you're going to control it. And that's going to be an important task for you. There's some more things dealing with financial information. So again, having authorizations on requiring management to formally approve of different types of transactions, reconciling data or finances. Segregation of duties is important. So you separate responsibilities related to authorizing transactions, requiring transactions, and maintaining custody. So for example, if you're issuing a payment, someone else authorizes it, someone else will record it, someone else will actually issue the check, and someone else will sign the check. You have different duties, or you don't have like a husband and a wife working in the same area in the same department where there could be a conflict there. So that's really important. Physical safeguards, again, using cameras, locks, physical barriers to protect assets. That's really important. A lot of companies have cameras and locks, having, things blocked off. That's important. That protects your physical assets. It's important. Performance reviews is comparing actual performance with different benchmarks. So that's important. maintaining records so that you have evidence to support the transactions and what's happening. And then information systems security, again, that's a really important growing area. Is using controls like password, access logs, only giving people only access to certain portions of the software that they need access to. So if they're not, for example, if someone's not responsible for issuing payments, they don't even have access to that portion of the software. It's important. Now, environmental, social, and governance or ESG responsibility perspective, again, realizing that companies are not just responsible unto themselves and their employees, but they're responsible for the greater good. And this is an important concept. And so, again, looking at this, that we want to realize that companies are responsible to look to all stakeholders when making decisions. And it goes beyond legal compliance to include voluntary actions that satisfy stakeholder expectations. And so you can do a lot of different things with that. So first of all, stakeholders include groups such as customers, employees, suppliers, communities, investors, and environmental and human rights advocates whose interests are tied to the company's performance. And we see here 6 different areas that they're involved with. But it's important, again, to realize the company, they're in a community. Obviously, the company should want to try to do good for the community and do good, for the customers, do good for human rights, making sure of where you're sourcing products from and how those workers are being treated that are actually making your product. Obviously, environmental stewardship is really important. So, making sure we're not dumping products down the drain that it's going to contaminate the water or what have you, or if we have leaks that we take care of that, or just being sustainable in what we're using. Those are all really important areas. And we see here, some different um, aspects to that as well, that those different groups are looking at. So again, looking at reducing carbon emissions, looking at lowering our product footprint or how much packaging the product takes, toxic emissions and waste. I've mentioned the amount of water that we're using and that we're not wasting water because we realize that's a real limited resource. Packaging waste. So again, how much are we using a huge box to send a little thing, or how is it constructed? Renewable energy, that's a big area now. I know the other day I had an appointment up in San Francisco, a medical appointment in San Francisco, and everything's fine. It's good. But I remember driving back, and I don't remember what town I was in, but it was a Safeway plant. So it was around where the Altamont was. And they had the Safeway plant where they were making all of the products that they sold at the Safeway grocery store. And one of the things that I saw there, and I've driven through that area before, and I never noticed it before, is they had these big wind turbines. And on the side of them, they had the Safeway logo on the side of them. So obviously the Safeway plant, they're powered by, at least in part, by wind energy. And so obviously that's something, obviously the people that shop at Safeway, they think that's important. Obviously, so it's good. A lot of companies I know are doing solar now. In fact, there's a church I used to be involved with that I'm a member of that I know has solar, which is great. I mean, it's good to obviously it reduces their electric bill, but it is important, to be a good steward of our resources and of the environment, what we have. A responsible material sourcing, what happens at the end of a product life. So for example, a computer, once it's no longer useful, what's going to happen to it after? So having recycling plans. I know Apple does that. I know they take back a lot of their products. Responsible production, recycling, and reuse. Child labor is an area, employee health and safety. Obviously, we don't want to make our workers sick or give them some kind of a horrible disease. Customer data privacy, that's important. Um, Investing in our communities, that's important, and doing different kinds of work, charitable work in the community. A lot of companies do that. Support different kinds of things. So these are all areas that you can look at, and these are all things that you want to be aware of, because these are all things that are going to be real important for you. So again, a business process is a set of steps that are followed in order to carry out some task in the business. And a value chain is where consists of the major business functions that add value. And so we see there the little boxes that are the business functions that would make up a value chain. One area that is, again, it's becoming more and more and more important is this concept of lean production. In fact, there is training that you can take and certification in lean. Another part of lean is called Six Sigma, which you can be like a black belt in that, a green belt, all this in that. So this is an area, if you're going into manufacturing, lean production is one that you really want to look at and want to know more about. But it's a management approach that organizes resources such as people and machines around the flow of business process, and so and only produces the units in response to customer orders. So you are doing that. You're trying to eliminate waste. You're trying to make things as just as you need it. So one concept of this is the just-in-time production, because products only get made in response to customers' orders, and they are completed just in time to be shipped. So you don't have a million whatever, let's say a computer, sitting there before it's ordered. So Dell is one that might practice that. You place the order, they build it how you want it. They don't just have them sitting there. Okay. So that's just in time, that are built to order just as it's required. Traditional manufacturing methods organize work departmentally and encourage those departments to maximize their output, even if it exceeds demand and bloats inventory. And that's a waste, because again, you have things that spoil, you have things that become obsolete. So just in time production, it eliminates that. Because lean thinking only allows production in response to customer orders, the number of units produced tends to equal the numbers of units that are sold. And it also results in fewer defects, less wasted effort, quicker customer response times than traditional uh, manufacturing. So there's that. All right. And again, some of the we looked at that. Now, leadership is another area that you are going to be responsible for. And again, to be an effective leader, you're going to need to understand how intrinsic motivation, extrinsic incentives, and cognitive bias influence the behavior of your fellow workers. In that, again, looking at what is going to motivate your workers, what's going to empower them, what is going to make them feel like employee empowerment. That is important, and that's something you're going to have to work on as well. So we want to make sure that employees are pursuing our strategic goals and also making operable decisions, not just that would benefit themselves, but what would benefit the organization as a whole. Okay, so that's it. What so this is kind of giving an idea of what managerial accounting is all about. What you're going to do now is go ahead and complete the other activities that are within the week 1 prologue module on Canvas. So I'll talk to you again soon. Bye for now.